This is Nashima, the CEO of InfoTaxCard.com, and we are a team of CPAs and EAs. I'm proud to be part of this team, and I will pay attention to every word to fully comprehend you. I will cover in this program what are the loss limitations for the pass-through entities, and I will also discuss in this program how different pass-through items affect the basis and disallow deduction for tax purposes. What are the parameters to calculate losses and deduction for a pass-through entities? What is the pass-through entity? There are various type of pass-through entity. In this program, we are going to discuss about the S corporation and LLC, which are the pass-through entity. What is the pass-through entity? The non-taxable entity, and any income and loss are passed through to their partners and stockholder, and they pay taxes rather than the entity. So what are the parameters to calculate losses and deduction for pass-through entities? A partner or shareholder can have 4 different limits on their distributed share of an item of deduction or loss from partnership or S corporation respectively. The limits dictate what each partner or shareholder is allowed to deduct on their own return. When examining the limits on tax deduction and loss, it is important to consider the order of application. Now we are going to discuss in which order the losses and the deductions of a pass-through entity should be considered. Number 1, the nature and extent of partners' involvement and investment can impact how losses and deductions are treated. Number 2, when determining the limit for S corporation, it is important to factor in both the shareholder stock and any loan made by the shareholders to the corporation. Number 3, taxpayers are only allowed to deduct losses up to the amount they are at risk in the activity under these rules. This takes into account investments, loans, and other financial commitment. The application of passive losses and credit is governed by passive activity rules, which often limit the ability to offset non-passive income with passive losses. Taxpayers can maximize their benefits while complying with tax regulation by understanding these layers to properly apply deductions and losses. Now we are going to discuss what is the limit to claim loss from an S corporation. The S corporation's operation affect whether a shareholder's stock and debt basis decreases or increases. Number 2, the amount of taxable income from a distribution is determined by the stock basis of the shareholder. And in order to claim an item of S corporation loss, a shareholder must first have sufficient stock or debt basis. I'm going to share with you a case study to explain how the basis effect of a pass-through entity. At the start of the year, a taxpayer has a basis of $22,000. The corporation experiences an ordinary loss of $9,000 and the corporation withdrawals of $16,000 during the year. In this situation, first we will deduct $16,000 of withdrawals from the opening basis. So we will have $6,000 which will be offset against $9,000 losses. So in this situation, the shareholder can only take deduction for $6,000 of the losses, which is limited to the basis, and the remaining $3,000, which is $9,000 losses minus $6,000 basis, is carried forward for the subsequent years. What are the criteria? What are the criteria for allocating losses from partnership? Partnership is also one of the kinds of a pass-through entities. In a partnership, there are 2 different interests for each partner. Number 1, the current asset in the partnership are the property of a partner who holds a capital interest. To put it differently, this is what a partner would get if the partnership were liquidated and its assets were distributed. Number 2, the partner is entitled to a profit interest that represents their share of future income and losses in the partnership. The partner's outside base is also known as their interest in the partnership, which is adjusted annually to reflect various financial activities. Here is a breakdown. Only to the extent of their basis in the partnership are partners allowed to deduct their pro rata share of the partnership ordinary losses. If the basis is greater than 0 in the subsequent year, excess loss can be deducted. So in this program, we have covered what are the parameters to calculate losses and deduction for the pass-through entity, what is the limit to claim losses from an S corporation, and what are the criteria for allocating losses from partnership. And also we have also covered the definition of the pass-through entities. I request to subscribe to my channel to receive the most up-to-date and accurate tax information in your email regularly to enhance your knowledge. I thank you and God bless you.